We're putting the spotlight on private equity on the continent this morning with Ronald Tamale, Director of Private Equity Africa at Standard Chartered, and Ketan Patel, Managing Director at ETG as well. Welcome, gentlemen, and thanks so much for joining us today. Ronald, let's start off with you and look at the case for African private equity, the merits. Is there enough, firstly, of a return of investor risk appetite, and secondly, more fundamental economic argument for actually investing in the continent via this route?
Absolutely, I think so. I mean, if you look at it, South Africa itself has always had a private equity industry. I think a lot of the private equity funds are starting to move into the rest of Africa. Nigeria is a big market. There's a big focus now on the rest of the continent, especially East Africa through Nairobi. And for us, at Standard Chartered, we are a sub-Saharan fund in terms of Africa, with 2 offices, one in Lagos, one in Johannesburg. And we also cover East Africa through Nairobi. And so for us, this is the market where we see a lot of potential.
It's one thing having that interest and that footprint on the continent. Just how open has African business been to private equity, where it's still to a large extent seen as a relatively new asset class?
Yes, true. But I think if you look at it, again, Nigeria is a big market where you've seen a lot of activity. I think in East Africa, you've had funds looking at things, and a lot of funds have been raised for the East African market. But you have traditionally a lot of family-owned businesses and over decades. And so part of that is getting these businesses to understand what it's like to bring on an external investor. And that is a learning curve for the families and for us as practitioners. And so this type of transaction where you're working with a family that's been running a very good business for 40 plus years, is, I think, one of those stepping stones to something like this.
Ketan, let's bring you into the discussion at this point, because of course Standard Chartered's Africa private equity team has invested $74 million in Export Trading Group Mauritius. Just how open was the company to private equity at the onset?
I think we have had this as a process for about 2 or 3 years. At the very beginning, we were sort of almost uncomfortable with being a family-owned company to have an external investor. But slowly we realized that if we were to grow and deliver the true potential of what we believe African agriculture is all about, we would need external funding.
So that understanding coming through pretty quickly for you. Let's take it to your plans moving forward and how you're actually looking at leveraging off the bank's private equity capabilities and expertise.
Okay, firstly, the money that we've just received from the private equity will be invested largely in creating additional warehousing infrastructure. It will be for creating additional processing capacity and additional warehousing capacity. On the longer term, we see Standard Chartered coming in on the private equity coming in to advise us to how we can access the international markets, how we can access the international financial markets, how we can access perhaps going on to an IPO.
Of course, that geographic diversification is very important and a standout feature of the strategy moving forward. Ronald, why ETG?
First of all, it's in a great sector across multiple African countries. At the moment, they're in about 25 countries. Superb management team, long track record of performance. And as I said, again, just the fundamentals of the sector are a big driver. And another part about private equity in Africa is being able to write a large enough check. And with a company like this, at a valuation of 500 million plus, it gives you that.
Well, you make it sound very easy, getting a grip on a company like this, Ronald. And of course, country risk is something that has become front of mind for any investor coming into Africa. What about industry risk? What kind of assessment is actually done on that basis? And what are some of the challenges you've identified within this agricultural trading space specifically?
No, absolutely. We've been around, I've been around ETG since 2008, speaking with Ketan and the family. It's taken us a while. I mean, it's not a company that's, as an outsider, it's easy to understand. But once you actually step away, and under the word trading, you always tend to think about financial markets. But what this company really does. It's a supply chain manager. They are sourcing at the farm gate, buying from smallhold farmers, aggregating out, basically warehousing a lot of commodities and moving these commodities to the markets where they need to go. It's actually a very interesting business model, but it takes time for one to understand it and to get comfortable with it.
Just how comfortable have you gotten with other geographies? Because you mentioned this geographic diversification as part of your plan. What are some of the countries that have gotten your attention where you're looking to expand into, Ketan?
Our main expansion for 2012 is going to be West Africa. This is, we are looking at the bigger economies, Nigeria, Ghana, Togo, Benin, Burkina. This is our main focus area, and we'll look to expand outside Africa in areas where either they're sourcing markets for us or their origin markets for us.
Yeah. In terms of the risks you've identified going down this path, I mean, just how risky is it, and how are you weighing up risk versus the opportunity you've identified?
I think every market is risky. It has its own dynamics, but we believe we have, over the years, got a lot of experience working in Africa, and we believe we can emulate the same model we have in East and Central Africa, in West Africa and beyond.
Yeah, of course, we've been talking about your entry, Ronald. Exit options are an important consideration when investing in African companies as well. You know, there's only 4 stock exchanges in Africa that have a market cap that's greater than $50 billion. Others don't have the liquidity to absorb IPOs in excess of about $100 million. To what extent does this make you wary and hamper some of your investment decisions?
No, I mean, it's a large consideration, and I go back to your earlier question about why ETG.
Yeah.
I think with, given one, the scale of the business, the exposure to the different markets, you don't technically have to list at any one particular exchange. However, with this type of business, the attraction, if listing is the route that we do go, the attraction of international exchange like Singapore, for example, where you have the likes of trading businesses similar to this, the likes of Olam, Noble, and those type of businesses, this company could definitely be listed in that type of exchange.
Okay, you spoke about geographies, you spoke about some sectors. How much does Standard Chartered have when it comes to funds under management right now? Can you disclose that, the scope on that, and what's your target, let's say, over the next 5 years?
No, absolutely. We are a captive private equity fund, so we don't have LPs per se. All of our capital comes from the bank. The bank at the moment, the private equity portfolio across our geographies is about $3 billion. In Africa, we're at the moment at 400 million. And I think in terms of our appetite is still there. The capital, the bank is very supportive. And as long as the bank likes the sector and continues to support us, I think we don't have per se a limit to the number.
Well, that's good to know. I'm sure many happy to hear that. Thanks, gentlemen, for joining me in studio this morning. Of course, Ronald Tamale is Director of Private Equity Africa over at Standard Chartered, and Ketan Patel is Managing Director at ETG as well.